With the S&P 500 index facing significant long-term resistance between 1403 and 1410, we're all looking for ways to monitor risk on versus risk off. We believe that small caps or the IWM ETF can help us do just that. In the chart that follows, we'll show that IWM, especially on a weekly basis, has a bullish slant and is definitely leaning bullish for risk assets, precious metals, and commodities. However, a bearish failure of the setups that we'll show in the following slides would send red flags up for risk. In terms of simplifying the process, as long as IWM stays above 78.61 on a closing basis or 76.25 intraday, the bulls probably continue to have the upper hand. Also, if weekly RSI on the IWM chart can remain above 50, that gives us a bullish bias. Conversely, if IWM closes below 78.61, especially on a weekly basis, meaning following the close on a Friday, or intraday moves below 76.25, then the bearish case starts to pick up steam. Another bearish indicator for risk in general would be that if weekly RSI on the chart of IWM closes below 50. Currently on Wall Street, we get the feeling that there's a lot of binary forecasts out there. You're either extremely bearish or extremely bullish. We believe that's dangerous. We need to pay attention to price, not to the opinions of any talking head or the forecasts of anybody on the internet or on Twitter, and that includes us. We need to just pay attention, we need to be flexible, and remain open-minded. You can use this icon in the lower right-hand corner of your video player to view in full screen mode. This icon allows you to improve the image quality and clarity of the charts. We'll warn you that the chart of IWM that we'll review shortly looks complex and busy. It's very, very easy to understand. We'll walk through it piece by piece. Setting the stage here, this is a weekly chart of IWM, the Russell 2000 Small Cap Index. These are moving averages here, these thin colored lines. Just want to make a point that signals on weekly charts are more important than signals on daily charts since they occur in longer time frames. We'll try to move from left to right here to make sure that we don't leave anything out. Here we're looking at RSI on IWM weekly. Here, this is December of 2011. Here's the S&P 500 index at the bottom. As a reference point, this black line here is the Russell 2000 index, or the IWM ETF. Here you'll notice last fall or last winter, when RSI broke above this center line here, which is the 50 line, this box, good things happened in small caps and in the S&P 500. From a bullish perspective, we'll note that today, weekly RSI on IWM is at 57, which is well above this box here. This is the present level here. Another potentially bullish development is RSI has a downward sloping bearish trend line here that began near the peak in February when we had this consolidation phase. You can draw trend lines on RSI. Weekly trend lines for RSI can be extremely helpful, and you should typically respect breakouts. This is resistance, 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 resistance. 5 times this line here acted as resistance for RSI. If you know technical analysis, you know that the more times price, or in this case RSI, touches a trend line, the more relevant the trend line becomes. Here, near the purple arrow, we have a bullish breakout of this downward sloping trend line for RSI here, which also corresponded with a bullish breakout from this A2 box here. This A2 box here is similar to the A1 box here, where price on IWM on a weekly chart moved above a relatively tight cluster of these moving averages. This is a bullish break here. IWM did well in the weeks that followed, and so did the S&P 500 index. In fact, after this breakout at A1 here, where weekly RSI clearly moved above the center line of 50, the S&P 500 gained roughly 200 points from this point here to this point here. We have a similar RSI breakout recently and a similar breakout from a tight cluster of these moving averages here. Again, this point A2 is similar to this box A1 here. Another recent example showing how weekly RSI can help us. When weekly RSI on IWM broke back below the center line here, or went below 50, you can see after that point, IWM, or small caps, did poorly for several weeks, and so did the S&P 500. So again, we're back above that bull-bear demarcation line, sitting at a bullish RSI of 57. As long as that holds, that's a good sign for risk assets in general. Here, this downward sloping trend line on small caps was broken. Right here, this is the first step of a possible trend change. Then we came up and made a new high here. The second step for a trend change is here. We're making a higher low here by 2 relative to this low here. The third step for a change in trend would be to make a higher high relative to this high here, which occurred here at point 3. So on a weekly chart, we have a break, a high, a higher low, and then a higher high, which is the definition of a bullish trend change. You'll also notice after we broke out above this green line to make that important higher high, or to complete the third step of a trend change, what once was resistance now acted as support. This bullish breakout was quote-unquote confirmed here when this green trend line acted as support and we bounced back off it in a bullish manner. In a similar vein, this dotted trend line here, downward sloping bearish trend line, acted as resistance. We have a bullish breakout here above the red dotted trend line. And once again, the breakout was quote-unquote confirmed when that red line acted as support and price bounced off in a bullish manner. You can also make a case that from an inverted bullish head and shoulders perspective, you can look at this piece here as your left shoulder. Come down here, this is your head, which has to be lower than both shoulders. We've come up now, and this box here that I'm drawing shows roughly a right shoulder. Typically, when your right shoulder is shorter in duration than your left shoulder, that tends to be bullish, in that the doubt that was present here isn't as strong here. This line here can also be thought of as your neckline. Here's a bullish break above the inverted head and shoulders neckline, which would also tend to lean towards the bullish camp for the Russell 2000, IWM ETF, and for stocks, commodities, and precious metals in general. Now, we have several bullish setups on this chart. Obviously, if bullish setups fail and a bullish breakout fails, that will send bearish signals. So the things to watch would be, you would want this period here, or this point here, which is your close on July 30th on a weekly chart. We'd like to see, from a bullish perspective, IWM remain above this point here, which is 78.61 on a closing basis. The intra-week low here, which you can't see on this chart, was 76.25. So red flags would be raised for IWM, small caps, stocks, commodities, and precious metals if we see a close below 78.61 or an intraday move below 76.25. In a similar vein, if IWM has a weekly RSI close back below the bull-bear demarcation line on RSI of 50, that would also be bearish. More importantly, if we see weakness, we'd like to see this downward sloping blue trend line act as support again. So it's possible that weekly RSI could dip a little bit below 50 and still remain above this trend line. We feel confident that this chart of IWM is an excellent way to manage risk in stocks, commodities, and precious metals. If you're bearish and would like to initiate short positions, if we break below these levels here, that would produce a red flag and potentially a good entry point for shorts and potentially a good time to cover longs that have profits. You can find a similar and helpful August 26th analysis of risk on versus risk off using the S&P 500 relative to bonds, or SPX divided by IEF. To find that video, you can Google Shivako Capital Channel. The name of the video from August 26th is Bullish Breakout or Bearish Reversal. We will try to post helpful updates on Twitter. You can find us on Twitter by Googling @Shivako Capital and clicking on this link here. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shivako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.